Hey everyone, John Henry here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so we can better understand it tomorrow. And today, we're taking a look at the crude oil futures. Now, crude oil, for the most part, looking at the bigger picture here, we see a very cyclical type of market. They opened up the day, they drove down, and found a balance for a good hour or so before they started popping back up. Now, when they made that new high, they started failing to break out of those. So we had a failure to break out there, they started turning down, but then we ran into the same problem at the bottom. They failed to break out at the lows, failed to break out at the highs, failed to break out. So when they finally do get the actual breakout move, chances are we're just in a range, and really we're just going to start turning back down again. So a lot of sellers will begin selling into this kind of position and drive the market down, and that's exactly what happened. We had the buyers follow up, they got a secondary move, and then just started dropping back down, and this move up was very quickly taken over by this move down, if not more aggressively. Now, with the aggressive sell move to the downside, we end up with a little bit of a flag, right? We break down, very obvious flag pull, if you're familiar with the type of formation, and then we form a flag. Now, the flag itself, one big thing of interest, when we look at markets, in general market structure, we usually see the market go like this, right? Nice cycle up, pull back, nice cycle up, pull back, nice cycle up, etc. But you'll notice what's happening. They're coming back to those previous swings and then continuing up. Now, obviously, that's a drawing, and that's in a perfect world, but very frequently you do end up seeing that. You see them break out of the move, right? Notice the swing high, they pull back towards it, and they miss it. We get the same thing here. We have a strong breakdown. They come back to those previous swing highs, or swing lows rather, but they miss it entirely, not even close, and they start turning back down. Now, notably, another level of concern is that this is all happening at the previous high of day, which is at 5106. Now, buyers will be buying into this move because the last time that we broke down a swing low, it failed and popped back up. Same reason why sellers were selling here and all the cycling that we saw back here. But the overall momentum that we have now is very bear-weighted, considering the fact that they missed the breakout up here, they didn't come back to it, not even close, and are starting to turn down again in the form of a flag. We're not really seeing those buyers show back up to the party. They missed the move here, it doesn't really follow through very well, it just gets barely above those previous swings. And now we start seeing a little bit of a rinse and repeat. We get these little minor swings inside of here, and these begin failing now, which means that we're looking for a range and a cycle back down to the lows. So we find selling pressure, a beautiful little inside bear bar to drop the market down with enough room to get to the lows so that scalpers can at least make something on the trade, and it drives down to the bottom, and once again you see the buyers coming in. Now, I like, in these types of environments, getting in on nice small candles, because those, they have the room for the trade to work, right? When you're selling after a giant candle like this in a market that we're not seeing the follow through, you end up having to hold the bag for a long time before it finally goes in your favor. I'm not a big fan of that, so I would rather wait for some better looking candles, which is why there's not a buy signal here off of the bottom, because by the time that candle fires off, you're already buying after a huge move has happened, comparative to the rest of the day at least. It doesn't make any sense. Now, you may be able to get away with it if you're going for, 3-4 ticks on a scalp, a true definition of a scalp, but for longer term traders or someone who's even looking for, even 10 ticks, there's probably not enough juice in the tank to get it done without having to wait for a very long time before it happens. So then we run into a situation of, well, we're going to need to wait for a better entry. We start seeing some failure. Buyers are going to try to come in and hold the move, but they're already done, which means that, well, they failed the rotation back to the highs. Chances are we're going to rotate back down to a new low and probably find more buyers at the bottom. So a nice little sell signal, again, a really tiny bar to get the trade going, allows the sellers to come in, slam the market down to a new low, and we run into 60-minute support at 50.68 for a beautiful drive lower. Now, the overall momentum that we end up seeing here, again, noting that buyers are probably going to come in below the lows, just like they did here and just like they did on all of these other times, we're probably going to find some buying pressure. Now, with that buying pressure, we're also running into 60-minute support, so we have even further a case to be a buyer. We fail the move below it, it pops back up. Now, you know me, I'm not a big fan of being the first one to the party. I like giving them a little bit of time, prove to me that the buyers want to come in. We get a beautiful sell bar, right? Now, this is important because we run into a sell move to the downside where sellers are very likely going to try to pile drive the market lower. They get a micro double bottom, even better for the sellers, and then it fails. right? It fails to go lower, it collapses down for a tick, triggers in all of the sellers that are holding on, waiting to get in there, and then it pops right back up again. And that is very common to see when you have a trap at the lows of a range. We turn back up, beautiful bull engulfing bar, and although it is very large, in this context there are a lot of sellers that are probably stuck in this move with stops just above, and the objective is for the buyers to push those stops and rail the market higher. And that's what happened as well. So a really good day in terms of psychological aspect of crude oil, as long as you were patient enough to wait. That was the big game today, is patience. We have FOMC meeting minutes later today, and chances are if you weren't flat on the day, you may have had a little bit of something to work with. For the most part though, pretty range bound, and patience was definitely the key, along with of course understanding the psychology behind the moves. So that's going to do it for this one. Hopefully you learned something, hopefully you found it interesting, a little bit useful, and we'll see you next time.